Hey everyone, welcome back to this week's UTrade Rundown. I'm Lance Kai, and today I'll run you through our outlook on ICT. ICT will be sailing through a fair amount of headwinds in 2026, but we still project our revenues to continue growing by 4% from increasing yields and added capacities. First, we have the closure of the Strait of Hormuz increasing oil prices, leading to decreased trade volume, especially in Asia. Second, the halted volume in Iran's Basra Gateway Terminal. And third, a drop in capacity as ICT divests from their YICT terminal in China, amounting to a loss of 5% in total capacity to recycle capital into new expansions. However, thanks to the performances of their diversified portfolio of terminals, the addition of the new Durban Gateway Terminal in South Africa, adding 2 million in TEU capacity, and the ramp-up of the Batu Ampar Container Terminal in Indonesia, we forecast 2026's volume decline to be softened to 5%. Aside from the inflation figures that ICT puts on top of their fees, it has announced that it will be increasing tariff and handling rates to balance out the loss in volume and preserve revenues. We believe that yield growth for the year will rise to 10%. Now, moving on, we want to highlight their aggressive expansion plan. They have allotted $740 million worth of capital expenditures in 2026, largely directed toward expanding capacity in the Philippines, Australia, Madagascar, Poland, Mexico, Honduras, and Ecuador, with a pipeline expected to add around 3 million TEUs over the next 3 years. Now, this expansion, combined with the inflation-linked tariff adjustments and discretionary increases, is expected to drive continued revenue and earnings growth despite headwinds. We believe that ICT will continue its aggressive expansion strategy and smart capital management, outperforming peers through their strong cash flow generation and return on investment. We issue a buy call with a target price of 910.50 pesos, supported by strong ROE figures that trumps global peers. Take a look at ICT's ROE compared to Asian peers who operate in developing markets similar to it. The blatant gap between them shows the comparison in performance. ICT is forecasted to sustain their strong ROE figure with 39% in 2026, a figure more than triple of their peers' 11.4%. The world average, on the other hand, falls at 24.9%, showing that ICT outperforms both peers in both developed and developing nations. We urge you to look beyond the 2026 hurdle and focus on the expansions and their ability to translate capital into profit. And that's it for this week's UTrade Rundown. You can read a more comprehensive analysis and get regular market updates when you open a UTrade account today.